developing algorithms that we can use someday. And when is that someday? We're probably somewhere between, in terms of the number of qubits, order of 5 orders of magnitude or 6 orders of magnitude away. And so if you kind of said 15 years for very useful quantum computers, that would probably be on the early side. If you said 30 is probably on the late side. But if you picked 20, I think a whole bunch of us would believe it.
I think that Jensen Huang is a very smart individual, and he's built an amazing company. And he may be the authority on many aspects of computing, but certainly not all aspects of computing, and certainly not quantum computing. In this case, he's dead wrong. And the reason he's wrong is that we at D-Wave are commercial today. We have companies like MasterCard or NTT Docomo or Pattison Food Group or Ford Otosan that are using our quantum computers today in production to benefit their business operations. Not 30 years from now, not 20 years from now, not 15 years from now, but right now, today. And moreover, we have been able to solve problems on our quantum computer in the area of materials simulation in minutes that it would take well over millions of years to solve on the fastest supercomputers, which, by the way, happen to be massively parallel GPU computers. So Jensen should think a little bit about that. We are solving those problems in minutes today, and it would take millions of years to solve them on massively parallel systems that he provides. And by the way, I'd be happy to meet with Jensen anytime, any place to help fill in these gaps.
What's the future for mining in Russia? Do you expect Russia to continue to see the kind of level of growth that it has experienced over the last few years? Do you think these restrictions really slow it down? Or do you think this is just creating more clarity for future expansion for mining companies in the region?
I would say Russia was and will remain number 2. It was originally number 2 in hash rate after China, and then the switch to US. I think it will still remain number 2.
The recent elections also feel like a cultural tipping point towards once again prioritizing speech. So we're going to get back to our roots and focus on reducing mistakes, simplifying our policies, and restoring free expression on our platforms. More specifically, here's what we're going to do. First, we're going to get rid of fact checkers and replace them with community notes similar to X, starting in the US. We tried in good faith to address those concerns without becoming the arbiters of truth. But the fact checkers have just been too politically biased and have destroyed more trust than they've created, especially in the US.
I'm going to lay off a bunch of people. I'm going to replace them with computers. But you make it seem like you're doing it for some big moral or ethical reason, when in reality, it might just be costs.
And he was going to do it anyway, I'm sure.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're hitting the Cash App. And also, guys, make sure you go like and follow the TikTok. More videos to come. And we have NVIDIA's Jensen on supercomputers. And guys, if we didn't know any better, like the sheep, we will listen to him. For those who have the NWO book, we know he's definitely not telling us the truth. And we don't expect the truth from these CEOs, these billionaires, these hedge fund guys. If you've been following me on YouTube from the beginning, I bought you plenty of videos. Jordy Rose, which one of the videos, the recent one, they flagged me for. Bought you Ray Kurzweil, Ben Gertzel. Bought you videos from the 90s when Bill Clinton was giving these supercomputers to China. And when it comes to technology, you can go back to Reagan. Remember, Anthony Sutton brought us all that information. And a lot of times we're just looking at the United States. Just imagine the technology that these other countries have, like China. And we know China and Russia is still mining Bitcoin. And the BRICS nations led by China are definitely getting off the dollar in order to get over to this new digital economy, where the robots, algorithms, and drones take the economy over, pay each other with crypto, and the sheep go inside the metaverse. Remember, guys, this is a plan. It moves in phases. And we have Zuckerberg getting rid of Facebook fact-checking like X. But remember, bots took over X, and we know with Facebook, they've taken them over. And if you actually look at conversations on Facebook, AI will come and summarize the comments. And we know the alphabet boys are loving that. And then we have Janet Yellen speaking of the population. And you guys know I've been over population so many times and how important the population is when it comes to the economy, the way this economy is built. Because the next generation is basically a slave for the previous one. And when it comes to these baby boomers living long, my mom is 81 years old, not in the greatest health, but she's still ticking thanks to the Most High. But there's no way the next generations be able to keep paying the Social Security with no job. Remember, all this technology is going to come in and take the job. So that's the reason why universal basic income is going to be so important. But remember also, universal basic income can't last that long. But that's the whole point of the metaverse. And remember, the crypto teacher told you. Now we have yield rates rising. And you know I talk about yield rates on a daily basis. And I told you they would creep up. But we know once Trump gets into office, the Fed has plenty of room to bring them down. But remember, this is part of the plan. Rates higher for longer to destroy this legacy market so the fourth industrial revolution can rise. We've seen too many times these rates come down for no reason. Remember, all this is ran by an algorithm. And remember, the crypto teacher told you. Now we have mortgage rates still high. And it's really not the mortgage rates, it's the housing prices. Housing prices are ridiculous. But again, this is all part of the plan. They're going to bring you these affordable homes over these next 2 to 3 years, and they're going to be 3D printed, bringing down the current prices of housing. Guys, we've seen this movie before, and I want you to never forget Trump works for the banks. And who owns the banks? I'll let you finish that. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
We do have an aging population. We've known for decades that as that occurred, that would boost the cost of Medicare, Social Security, and Medicaid. And that process is ongoing as baby boomers retire. And these are all factors.
With rates ripping higher, the 10-year yield up 60 basis points in just the last month. The move putting pressure on major averages, the Dow losing 4.5% in that period, the S&P 500 down nearly 3%, and the Nasdaq dropping almost 2%. But a closer look may suggest that even bigger problems are looming. Rate-sensitive sectors like home builders, regional banks, small caps plunging over the past month. So do these moves signal that cracks in the market could spread even further? Guy?
Well, happy anniversary. I wore a jacket for the occasion, which I never ever do. But I'll say this. I mean, that is the story. And again, it wasn't the inversion in the yield curve. That's the warning sign. It's the resteepening. And now the 2s, 10s are as steep as we've seen in quite some time. But I don't think a lot of people anticipated 10-year yields a month and a half, 2 months after the Fed started cutting rates to be 4.7%. And I still think they're going higher. For whatever reason, the market is starting to care. I think it's going to care more the higher it goes.
And this is a global problem. It's not just in the U.S. that rates are rising. Japan is over 1%, for instance.
Japan, to me, is a lot more dramatic. I mean, let's talk about a 13-year chart in Japan on JGBs, the 10-year, which got up, and really have been crescendoing higher. In other words, I'm not even sure this is a level that we're going to rest at. And there is an argument that we've made that global rates are going to also partially pull up U.S. rates. There's been an argument about where Japan is. They have inflation. The question is, what are they going to admit to and what are they actually going to do? But, Japanese investors have been relative value buyers of treasuries. There's still a major discrepancy on that spread. Meanwhile, Chinese yields continue to go through the post-COVID lows. In other words, there's a real sense that the Chinese deflationary spiral is spreading. But everywhere else, there is pressure upward on rates.
Ryan, good to see you. So inventory has been a major issue for a while, keeping prices higher. You expect a boost in inventory as sellers get used to rates this year. But what might, if anything, cause inventory to be higher than you expect to the point where it might pressure prices?
Well, inventory has already increased. I think we're seeing total supply at about 10% higher year over year. You have to remember, we just experienced back-to-back years of the slowest sales market for residential housing in the United States since the mid-90s. So I believe that America is open for business, for housing. I believe that people should expect that long-term mortgage rates are going to be between 6 and 7%, even though short-term rates will continue to come down. And I expect sales to pick up due to pent-up demand that we've had sitting on the sidelines for the past couple years as both buyers and sellers accept where rates are, accept the new normal, and have to move.
Now, when yields rise, that means mortgage rates are on the move as well. Diana Olick brings us the latest. I can't imagine it's pretty, Diana. No, it is not, Kelly. Mortgage rates have been marching steadily higher. Today, the average rate on the 30-year fixed hit 7.17%, that according to Mortgage News Daily, and that's the highest since early June. Just a month ago, that rate was well below 6%, and home sales were starting to pick up, but higher rates are now taking their toll on mortgage demand. Applications to refinance last week were down 6% year over year, and applications for a mortgage to buy a home were down 15%, that all according to the Mortgage Bankers Association. Now, at the end of the year, the realtors had been saying that home buyers are getting used to a new normal of higher rates, but that's just not showing up to start the new year, at least not in mortgage demand. There are a lot more homes on the market now than there were last year at this time, but much of that is because homes are just sitting on the market much longer. High prices combined with these higher rates are sidelining would-be buyers. The forecast for this year, according to Fannie Mae at least, is that mortgage rates will fall modestly but stay above 6% with volatility. Existing home sales remain near the 30-year lows they're at now, but location, of course, matters. And new home sales, they say, will remain.
If those hostages aren't back, I don't want to hurt your negotiation. If they're not back by the time I get into office, all hell will break out.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. We will, and if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're going to get more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets. Now,
it was not just a poor auction. It was absolutely lousy, and you know, when the dealers have to step in to save a treasury auction, that's a rare occurrence.
Cryptoteacher and the New World Order book, plus the 3 Kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know, I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York. Long COVID Stories 3. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.